Hello folks, this is David Schlossberg from Assured Concepts Group with your April 2015 Educational Economic Update. In this month's video, we'll talk about some of the major economic headlines from last month and give you some insight into what they might mean for you as an investor. First quarter earnings season kicked off in April as U.S. firms reported on their performance in the first 3 months of the year. So far, the news is mixed. Out of 280 S&P 500 firms, overall profits were up a respectable 9.1%. However, gross revenue, also known as top-line revenue, was flat and many firms missed the revenue targets. These results indicate that U.S. firms struggled with weak demand and that earnings came from carefully controlling costs rather than organic growth. The revenue misses were especially apparent among firms that depend on global sales. The strong U.S. dollar has hurt conversion rates into dollars and made it more expensive to buy U.S. products. Volatile oil prices and soft global growth also affected many firms. On the positive side, firms were able to squeeze out some respectable profits. We also received our first look at the first quarter economic growth. The advanced estimate of GDP, or gross domestic product, showed that the economy basically ground to a halt in the first quarter, growing just at 0.2%. Though this early report is based on incomplete data, we can see that exports plummeted, businesses slashed investments, and their consumers held on to their wallets for dear life. How much of this weakness is still with us in the second quarter? That's the big question that economists need to answer. So far, we know that consumer spending edged upward in March and that wages also increased in the first quarter, giving Americans more money to spend. Hopefully, a warmer spring and summer will give consumer spending and business activity a boost. Last month's Federal Reserve Open Market Committee meeting was also a major event. Investors watched closely as the meeting progressed to see if the Fed would offer any more guidance about future interest rate hikes. Instead, the Fed completely removed all calendar references from official statements, indicating that a mid-June raise is very unlikely. The takeaway for investors is that the Fed is being very sensitive to the economy and to financial markets, and is not ready to commit to interest rate hikes yet. This is good news because it shows that the Fed is being very cautious and won't make any sudden moves. In the weeks ahead, investors will be thinking hard about whether first quarter weakness is continuing into the second quarter. While some of that can be attributed to seasonal winter factors that have faded with warmer weather, currency issues and oil price volatility may still be with us. As always, we are keeping a close eye on the economic environment and will let you know when circumstances warrant any changes to client strategies. That's it for the April Educational Economic Update. Please remember that nothing we talk about here is a recommendation. As always, if you have any questions or concerns about what we discussed, please give our office a call at 847-426-1077. We'd be happy to talk to you. Once again, this is David Schlossberg with Assured Concepts Group, signing off for the month of April 2015. Have a great season.